Hello, YouTube. Justin here. In this video, we're going to talk about how the first quarter is now in. It has been the first red quarter since 2020, or roughly 2 years, and one of the worst starts to the year, again, up to roughly February, like in the last couple of decades. So if you've been having a hard time trading the last couple of months, or having a really hard time finding direction, stay tuned. And in this video, we're going to talk about how a big move is setting up, and how we're going to know whether we are right or wrong, and which way we want to be positioned to make money, because that is our goal. So the first thing we're going to talk about here is going to be that there is a new month and a new quarter opening up. So let's have a look and see exactly what that means. The stage is set. And what I mean by that is you can see here that we are watching and seeing what is going to happen on this new month. It's so important because what we were previously talking about on weekend deep dives was that head and shoulders pattern, which was at 45405. Well, we broke that last month. And so far now we have an inside bar, but this area right here at 454, again on SPY, or here we got 454950 on ES, is going to be that key pivot, keyword being pivot. As a quick preview for what I'm looking for, I'm going to show you here that I'm using ETH and SPY because these are the ones which are already above their 50 weekly moving average. Normally, I like to compare ETH to QQQ and SPY to BTC. But for right now, for illustrative purposes, we're going to use these two. We went through this on the Friday live stream as well. If you want to know more about that, I encourage you to go back and watch it. So what I'm looking at here specifically is I'm looking over here at the pattern on ETH, which I'm already quite very bullish on, and long ETH. So we can note here that we got 3 lower wicks. That leads to a massive rally. Over here, we also have those 3 lower wicks, and it led to what? Well, the rally is starting. That's really nice. What's more important to me, though, is this lower wick which formed on SPY here, and the lower wick that got formed here on ETH. So we're going to look at that in a moment. But what I just want to point out is that I've been really noticing that crypto is leading and then stocks follow. So what we would have expected to see in an inflationary environment is that crypto would have dramatically advanced, especially when there's also that tension which has been happening in Europe. So the fact it didn't do that, and that crypto is more acting like the NASDAQ, is really telling to me. So what I want to point out here is just, again, we formed this lower wick on ETH, and now we are starting the month here. We also know we have that previous lower wick going back to August of 2021. And over here on SPY, we already have that lower wick. So what this means to me is that if the low is already in, and this is the area we're going to defend, we should see that very early into next week. So let's have a look and see what that looks like here. Again, same comparison that we used here on the Friday stream. Over here, we got ETH. Over here on the right, we got SPY. What I want to point out is just the technical pattern here. So we note that as we start off, we got a W pattern here. Again, you can note that by the W that we're putting here inside, and then we form a double top over here. I'm using SPX just because, again, I've got all these different boards and I need to get something clean here. So over here, we got SPX. Same thing. It's the S&P 500. It's the index, not the ETF. And again, what do we have? Oh, we got that dub, and it failed. So we got a double top here. We can see that with the red lines on top. Same thing over here with the ETH tops. And then we started a nasty cut here. So we take 2 legs down. You can see we put that back here. We got 1 leg down, dead cat bounce, secondary leg down. Over here on SPX, again, 1 leg down, dead cat bounce, and then secondary leg down. Very interesting. And now we get down to the bottom here, and we form that inverse head and shoulders. So we have that inverse head and shoulders, and that leads to a slingshot higher. Over here, we can also note that we got that right inverse head and shoulders. So we got the left shoulder, the head, the right shoulder. And when we look at this most recent period right here, what do we have? Well, we have a back test roughly to the eye chest, and then the slingshot up starts. And over here, so far, what do we have? Well, we have a back test to a little bit below the left shoulder, and then the slingshot up is starting. Keyword there being starting. It is not complete. If we're going to complete this pattern, we should see the S&P move to 4625 or 462 on SPY. And we can note here that's already happened on ETH. We penetrated 3,500 on this first push, and now we formed a higher high, and now we're back testing a key area here. The key area for me is 4375, and over here we got 4383. So where we're battling right now is actually right in between this previous top in August and the previous top from last month. If we're going to continue to advance and form a massive candle, we have to take out the relative highs. Again, this case here, we got that high in June, and we got the high over here. And once it cleared it, oh baby, did it move. Most of the move came after that area was breached. So into the weekend, the only currencies or only things that we'll be trading will be crypto. So the fact that we went risk on as soon as the market closed on Friday and already breaching those key areas, again, ETH right now is up by 6% on the month. It's only been a day and a bit. That's incredible. So the fact we're already seeing this tells me that if this lower wick is all we need on SPY as we form this new month, we should be busting through this area. Also important to note that on ES overnight, we already breached this area going into the Friday session. So here we got 4549.5. And on the new month here, we got the high of 4555.5. So technically already breached the area, which means that the bulls were able to at least penetrate that area. It's not been printed on SPY, but again, looking back to here, again, history does not repeat itself, but it rhymes. So what I'm trying to show you here is a template for how the market can go higher. And then when we get to the bear part, we're going to talk about how we could go lower. So I'll give you a quick little preview for that too here, and then we'll go forward. So actually, one more thing I want to point out too here. So we were looking at this chart last week. This is again, this is BTC. It only gives me a session once again at the close of the session here. So right now it's giving us 458, but we're closer to 465, so 46,500. And what's important to me is that we are above the 50 EMA. We are poking over 47.2, which is going to be our previous top going back to 2021 February. And then also here on our pivot to start that W off. So if we can close above 47.2, which we're really close to right now and already poked above, BTC is also ready for a breakout. Why? Well, we're trending up. We stopped going down. And now maybe we're ready to go up. So they're both showing the same thing here. Now we're going to flip over to SPY really fast here. And we're going to look here at the monthly chart. And again, if you were to look at this, the bulls and the bears can both say that they claimed victory this week, which is why next week is so important. The bears are going to say that, oh, wow, look, we have a reversal candle and we closed below 45405. The bulls are going to say, hey, well, we closed green and we penetrated that area, which is why it is so pivotal for this next month in terms of where we go, right? All eyes are on whether we can go higher or whether we can go lower. And I'm not smart enough to know where we're going to go for this next week, but I have a pretty high conviction in terms of where we're going to go for the next couple of weeks and the next month. So for the bears, again, what this tells me is that going into the new month, because again, Friday is the new month. What do we have for a high here on SPY? 453.46. For me, that would be close enough to call it a reject off of that area if we do not break higher. So the bulls and the bears are both going to be going at it first thing on Friday. Now let's try to close the story off and give you the bull tilt, because that is still the bull tilt that I am looking at. What we note here is that, again, we're starting the slingshot. Everything looks exactly the same. The W, the double top, the two legs lower, the IHS. And we're just starting this move, right? We got one candle over here. The first one starts, it breaks through the high and then doesn't look back. It's a dramatic move higher. And look over here. We just got one bar, but it's a nice one. So this for me would mean that we're either going to start this move into overnight, meaning ES, or we're going to start it first thing on Monday by opening flat. I don't know, but that is my bull case. And the reason why I'm bullish this week, or I want to trade bullish, is because let's think about this. If from here we are looking to break down, how far do we have to go? Well, we have to fall down by about just over 1%, just under 1%, sorry. So call it roughly 1% for a stop loss. And then to the upside, we're looking for, right, roughly 2%. That's pretty nice. If you would have entered on the shoulder, which is where I entered last week, right, roughly the 0.3%, and the upside is 2.3%. That's a 7-to-1, 8-to-1 risk-reward trade. So if the pattern's going to self-fulfill and history repeats itself, I think we're going to do just fine. And I think this next week is going to be very interesting. So again, to re-summarize, the lower wick on ETH, we got it out of the way. And then what? We power pumped up. We said that we see that exact same thing here happening on SPY. And if we look back here, 448.92 is going to be our December low, which is right here. And our low so far this month is 449.14. For me, that is technically a higher low and technically also forming a massive monthly inverse head and shoulders. And some of my favorite patterns to trade are the inverse head and shoulders and the W pattern. So the fact we're seeing both of those on the chart here gets me pretty bullish. All right, that is your preview for this next month here. So the biggest thing I'm going to confirm when we get a little bit later in the show is going to be whether or not the leaders are still leading. And like I mentioned briefly, I still believe crypto is a leader. I used it for my my move higher to all-time highs. I used it for my move lower. And now I believe that we are actually back to net neutral. And if we're going into a new bull market, we need all asset classes moving together. All risk assets, right? Need ARK, need QQQ, need SPY, need crypto, all moving together. All right, so why would we be bullish or why would we be bearish? I briefly showed you technically why that would happen, and now we have a revised bull and bear thesis here. So we can note that for the bull case, what we're like, again, if we're bullish, what I would expect to see, keyword being expect, the monthly continuation, which I showed you on the charts. TINA, there is no alternative. Bad news versus good news reaction. As we noted, again, let's just have a look here on the chart. So, right, we hear that there's potentially going to be a global peace. We go up by 1.2%. We hear, actually, this guy's a liar. We go down by 0.6. So that's where we're reacting much more bullishly to good news than bad news. Why? Because everyone already knows there is there's a big confrontation happening in Europe. Everyone already knows oil's above 100. It's been over that for a long time now, a couple of weeks, if not a month. Everyone knows we have inflation. Everyone knows the rates are going to be rising. So who's left that doesn't know this information yet? Almost no one. And actually, one thing I want to show here is the actually, I think I'm going to wait to show this. This is actually from Mason. So I'm going to show this one here a little bit later in the show, but I'm just going to pull it over to make sure that I don't forget. So there we go. Going back to here now. So if we don't react to bad news the way we would expect, and we react to good news the way we would expect, what does that mean? The stocks are strong. They want to go up. All right. For the bear thesis here, what do we have? Well, the 454 would be an impenetrable fortress. What does that mean? We can't go back above 454. If the bears lost the fight the first time, they have to regroup and destroy the monthly chart to not allow it to breach that 455 area, 454, 455. If they lost the first fight and they're actually in control, we cannot go back above 455. That is meaning that they don't have the troops rallied to defend the key area. And we're going to see a bull break. There we go. Recession risk. So everyone's talking about recession risk and yield curve inversion, and frankly, I think it's a little bit premature. In 2007, we had yield curve inversion. Did we have the recession in 2007? No. Was it in early 2008? No. When did it happen? Late 2008 into 2009. Oh, that's right. So yeah, it usually leads to a recession, but it's not a guarantee. The saying is that, again, I mixed it up when I said it before too. Every recession is preceded by yield curve inversion, but not every yield curve inversion leads to a recession, which means that it's not the same thing as before. I would also note that the stock market of today is not your grandpa stock market. Again, when we had these last dips, like in 2008 and 2000, the recession lasted for months and there were 50% contractions. What did we see in March of 2020? It was like a 1 month dip and then right back up. So dips are happening faster and they're recovering faster. They're more shallow. So again, we'll talk more about this on the bear case when we get a little bit later here. And again, the yield curve inversion is going to be a bigger risk. And again, the recession risk is definitely there, but I believe the TINA narrative is still strong. The surprises for this week could be the Fed minutes coming out on Wednesday, Russia, and whatever they're going to do, and then earnings, which are kicking off on the 14th. Looking forward to TINA. And again, TINA here, what I mean is that there is no alternative to the US dollar, the US stock market, US pricing power, the US military, and US politics. We saw that echoed on Friday when we had the EU and China summit. And frankly, when you think about the United States, they are in control of the world still. Politically united, militarily the strongest. Pricing power, again, these companies that you have to have, not nice to have. So if you, again, I was talking about this briefly on Friday, but who are the companies that you need to have? Again, if you, let's use Microsoft. So, right, Microsoft for Gmail. You want to have a free email account, or you want to have an enterprise account. If Microsoft is raising their prices for the first time in a couple of, I think it's like 10 years now, are you going to say, oh my God, $2 more for Microsoft, I cancel? What's your alternative? There isn't really one. Same thing with Netflix. There are other streaming services, but again, If Netflix charges two more dollars per month or $3 more or whatever, are you going to cancel? Some people will, but most won't, which means that they're going to make more money. They have more pricing power. They can pass off most, if not all, of the inflation to their consumers, which means the price to earnings means the price of your stock compared to your earnings. And with inflation, what's going to happen? Well, your earnings are going to get inflated. So your PE will actually compress. That's what's really interesting about the earnings season that's going to kick off. And when we think about the stock market, well, again, the US market is by far the best. And it's also why China, again, like 2 weeks ago, said that we're going to actually be reversing course, cracking down less on big tech because, frankly, we need inflows into our country, not outflows. And the US dollar, again, with the SWIFT and everything we saw, all oil and everything is still priced in US dollars, period. Russia wants stuff, but they're not really going to be getting it. Oh, what happened here? All right, Tina, now we got our key dates here. So the big one is going to be on Wednesday, the 6th. And thank you for the comments. Again, when we did the video last week, the date was not confirmed. Now we have it. The Federal Reserve minutes for the last meeting are coming out on Wednesdays, the 6th. We're going to talk more about what that means when we get to the bear case. Other things I'll be watching for are going to be, there's a Chinese holiday on Monday, which means their stock markets are closed. I don't really care. On Tuesday, we have ISM non-manufacturing. And this is likely going to show a contraction because, again, there's been some risk in the last month. On Thursday, we have ECB monetary policy and jobless claims. And on Friday, again, it's not on here, but on Friday, we're going to have the yield crop forecasts and planting season initial numbers for America. We're expecting a record soybean planting. And because we're hearing about potentially having a food shortage, those numbers that come out on Friday are likely going to provide a sentiment gauge for where we're going to go into the harvest season. Other key dates for the rest of the month here are going to be next Tuesday. Again, next Tuesday on the 12th, we got CPI. That's going to be a very important metric, especially after the FOMC meeting minutes come out. We got JP Morgan kicking off earnings and confirmed for the 13th. Again, we can see here that we got JP Morgan confirmed for April 13th, pre-market, and that'll be the same day. Sorry, that'll be a week after the Fed. And then we got options expiry on the 14th because we have Good Friday, which will be a holiday. So we're going to actually have Friday the 15th closed, which would normally be OPEX. And it is, I think this is the first time in my career that we're actually getting an OPEX that is not on a Friday. So it's a little bit peculiar, something to note. And then after OPEX is done, what do we have? Well, we have Netflix kicking off big tech earnings on the 19th. So we can go over here to Netflix. And we don't have a whisper for the earnings yet, but we have a check mark here, which means that it is confirmed for after the close at 4 o'clock on Tuesday, April 19th. So those are the big ones. And this matters because we're going to hear from the Fed, then we're going to see the CPI print, then we're going to have options expiry, and then we reset going into the focus for TINA, or the trillion-dollar companies and their pricing power and their stock prices. So that's what's important for me here. As we go forward now, I'm going to talk about my base case. This is the previous base case. It played out pretty close. So TINA, in an inflationary environment, you want companies that are able to have pricing power and pass those prices on to consumers. It's also Warren Buffett's favorite way to beat inflation, by being in stocks. Test up to 454.05. We went a lot higher. We went to 462. Bulls and bears fight for direction. With roughly a doji on the weekly, I would say that we have a fight on our hands. And where we go next week is going to be critical. We had the OPEX to quarterly chop. Again, from the options expiry to the quarterly expiry, there was significant chop. We went up, we went down, closing out roughly flat. And then our expectation was for a pro relief rally on the quarterly charts. And at least initially on crypto, we're seeing it. And the stage is set for a rally or a reversal back lower to the lows. And now we have a revised base case here for April. I am not planning to update this unless anything changes, excuse me. Again, TINA for stocks. We're going to talk about that. And the earnings season is going to likely confirm it, as I have noted here on number 4, and the reason why it is bolded. So number 2, 454.05 SPY pivot. Meaning, do we print above it? Do we hold above it on a weekly close? Because we're looking at a weekly chart. So it's nice that we're closing, nice that we poked over it. But to confirm it, we have to close over. Why? Because it means that we need to see that people are confident holding into the longest period where we can't trade, or Friday into the weekend with uncertainty, that they're like, you know what? We love 454. We're happy to hold 454. And the bulls and bears are going to fight for direction at that 454 pivot. And then I think that earnings are going to confirm the move into the April 8th and April 15th week and into the following week as well. There we go. As we move forward to the bull case now, what I want to look at are the leaders still leading? So let's move forward and have a look at that right now. And what I want to point out here, just going to be these trillion-dollar companies. So actually, first thing I want to look at is going to be the heat map. Are we on the bull case? Yes, we are. So what I actually want to do here is flip over to here first. I got to give a shout out to Mason for doing this. And he shared this. And what we've been seeing is that everyone, again, I'm not going to say everyone, but I've been noticing a certain couple of YouTube channels which are saying smart money, dumb money. This is going to happen. This is not going to happen. And frankly, I think it's a little bit naive to say that we know for sure where the market's going to go. But what you don't want to do is bet against the smart money. So call dumb money all you want. Just don't bet against the smart money. So the only thing that's for sure is that nothing's for sure. Let's have a look here and see what it says. In a rare display, smart money commercial hedgers are net long every major equity index futures contract: S&P 500, Dow Jones Industrial Average, NASDAQ 100, Russell 2000. They're now holding more than 53 billion worth of contracts net long, a record high, exceeding May 2020's 48 billion. So when we look back to here and we're looking at ES, it makes sense why we penetrated that 4549 area and why they bought the dip up hard. Why? They're long. They make money when we go up. Oh, they make money when we go up, and they want it to go up. Why? They're net long every major index, and they got more money this time than we did in 2020. The other thing I would note here is that most active fund managers have been underperforming the market, which means that if you're actively managing money and not doing anything, or passive investment by buying S&P makes you more money, these guys are now in trouble, especially with the quarter over and these numbers being reported. They're likely going to be forced to what? To reach for yield, because they have to justify why an active manager who charges fees is a better bet for your money than just buying the S&P 500. Oh, the other thing I would note is that, and Mason made a great point with this too, is that these guys don't short. For the most part, mutual funds, they don't. Again, that's why hedge funds take that over. So what do? Well, they raise cash and then they buy back. They don't short. So what is the world leverage? It's usually leveraged long. So there is likely more powder on the sidelines to buy than there is to sell. And we're seeing some early confirmation here. So that's pretty bullish. Now let's look and see what they've been buying. So looking at the last month here, what do we have? Well, we have Tesla bright green. We got Adobe, Visa, MasterCard, and then we got utilities, real estate, consumer defensives. There's no real clear trend, though. It's a little bit everywhere, right? There's clear rotation happening. We can now look at the last 1 month. It gets a little bit more clear now. It's pretty much everything except for what? Banks. So banks are a little bit stinky. Home improvements a little bit stinky, but everything else looks good. Chips leading tech leading SPY. There we go. Looking at the last 3 months or the last quarter, which is basically going to be year to date, what do we have? Well, again, the trend that we saw on the 1 month is clearly diverging from what we have here on the 3 month. Let's actually look at year to date just to smooth it out. So again, what do we have here? Well, we got energy up, we got Berkshire Hathaway up, we got healthcare up, which means people are getting defensive, right? They're buying utilities, they're buying energy, they're buying value stocks. And what's not been doing good has been technology. So we can note that they're pretty much all back to flat on the year here. So those gains that we saw in the last 30 days are pretty much just getting us back to where we were at the end of the year. The first ones flipping green here are Tesla. Again, Tesla is a big stock. It swings violently up and violently down. So the fact that Tesla is leading tells us that what? Leaders are leading. Oh my goodness. And who's next? Well, we got Amazon and Apple just under 2% red. Then we got Google. Then we got Microsoft and Facebook stinky. So the fact that we're seeing some leaders start to emerge on shorter timeframes here, where again, Tesla, Amazon are leading, NVDA leading, Apple, Microsoft ready to go, Google ready to go, Facebook snapping back, right? Why? There's so much gains to capture back. So this all tells me that leaders are still leading before we even look at the technical charts. Now let's do that briefly here. So let's look at these big cap stocks, because again, I'm noticing people saying that this is it. It's the big one. The big drop is coming. With all due respect, I don't think people fully appreciate what the stock market is telling you. I'm not smarter than Mr. Market, neither are you. So don't try to tell Mr. Market what he's doing. Try to read the story and understand what he's telling you. Why? He's telling you a story. If you know what the story is, it's easier to forecast what the end will be, right? The end of the movie. But if you're like, oh, well, this is a horror movie, and you start seeing that they're telling jokes and blah blah blah, maybe it's a romantic comedy, not a horror. Ah, this is a romantic comedy. Yeah, it's April Fools, right? Gotcha, bears. Gotcha, right? And I'll talk about the S&P when we get to that later part, and I'll talk about how the bulls and bears can both say they're claiming victory on the chart, like we briefly talked about before. So looking here, we did not get our 3 white soldiers, but what do we have? We have another gap down pump up. And what I would notice, just the closing price here on Apple, where we're at 174.31, just below 175. Why? Options. So the fact they were able to walk it up into Wednesday, fade it into Friday. Oh my goodness, that's like a normal week. Yeah, that's exactly a normal week. Pump it up into Wednesday, fade it into Friday. And they actually rallied it up into the close on Friday. Why? People like buying Apple. It's the strongest, most successful company ever. And we are significantly closer to the all-time high than to support here. We could backtest our bullish breakout to roughly 165. We could also backtest the 50 MA, but I'm seeing signals of strength, not weakness. Microsoft, second biggest stock. What do we have? We have an invalidated head and shoulders pattern here. Head, shoulder, shoulder, the red line. What do? We poked above it and closed above it. Leaders are what? Leading. And Microsoft, again, is going to be increasing its price and increasing its earnings or compressing its price to earnings. Amazon, again, we're hearing talks about unions, the first one being passed, and Amazon is one of the largest employers out of all these trillion-dollar companies. So what does that mean? They're going to have more pressure when it comes to that inflation narrative. Again, right? Wage inflation, price inflation, shipping inflation, all of that. Stock's still doing pretty good. It's closer to all-time highs than not. We do have a reversal candle after a massive move. We're closing below the 50 MA, but we are over this really strong area here at roughly 3,300. Looking at GOOG. And again, as people start traveling, Google makes a lot of money from travel. So what do we see here? Well, again, we see a bullish stock breaking bullish over a neckline. It's back tested and holding. All right, cool. Now let's look at Tesla, that big old leader. Where are we? Oh my goodness, right? 1, 2, 3, 1, 2, 3. And where is it? Well, it basically double topped here at about 1115, 1115. Here we got 1114, 1114.77. So double top, but it looks good. It's either going to back test somewhere between 955 and 1,000 or advance here. And it's pretty close to all-time highs too. So what is it? It's leading. It's green on the year. Looks like it's ready to go. Let's look at NVDA. We're hearing about the downgrade that happened to, what's it called? To AMD. And people are saying we don't need chips anymore. I think that's a little bit misleading. Why? Well, for the last 2 years, we've been hearing about how we need chips. And with a potential trade war happening with China and technology, all that, and Russia, I think we need more chips, not less. It's a matter of who's going to make them and what type of chips. NVIDIA is also planning to partner with Intel for their chip foundry for the plant they're going to be building in Ohio. So I believe NVIDIA is still a leader. Got a higher high, got a higher low, well above the 50 MA. And for me, it all looks silky smooth and gravy. There we go. Did I miss any here? I think Facebook. Facebook, it's stinky, but constructive, right? Still stinky, stinky, stinky. It's bouncing off previous tops here, which is the green line going back to 2018 and 2020, 2019. I don't know, though, right? There's tons of snapback potential. And when we look here on the chart, Facebook is up 10% in the last month because what? It's down so much. So in terms of the leaders leading, I believe I'm seeing all the evidence I need to say that, yes, the leaders are still leading and it looks nice. Facebook, NVIDIA, Tesla, Google, Amazon, Microsoft, Apple. What I want to do now is actually look at daily charts. So what I want to look at now is whether or not we know that what we're looking at on the monthly charts, weekly charts. Now we're going to look here at the daily charts. Why? Well, we're going to go through one by one. So Apple is what? Over its 200, over its 50. Nice. Microsoft, over the 50, over the 200, right? Bouncing off the 200 here. Not bad. Looking here at Amazon, below the 200. Again, this one here has the most employees and likely the most pressure in terms of the pricing power. So I'm not too surprised to see that one there lagging a little bit. Google, bouncing off the 200. Nice. Tesla, well above both averages. NVIDIA, well above both averages. Facebook, right, struggling to get back above the 50 here. But if it snaps, it's got a lot of room to get back to that 200 here, almost 100 points higher. So what that tells me is that um, if that S&P low at 449 is going to hold, we're seeing the leaders ready to lead. We're seeing crypto ready to lead. And we even see ARK closing out green in the week, pretty nicely green too. So in my opinion, I am seeing everything I want to know that this is good. What we're going to look at next is going to be QQQ, smooth the data out to see whether or not there's any clues here. And let's look at the monthly chart first. So this is going to be the tech weighted ETF, which gives us the clues. And in my opinion here, the monthly chart is important, but there's more wiggle room here than we do have on SPY. In terms of where we could go, I'm looking for 370-ish for a decisive break to break this head and shoulders neckline here. And I want to see a weekly close above that. If we can't hold up here, I think we're going to start sliding back down to roughly 352. That would be a pivot. The green line is going to be support. And in terms of the daily chart, again, what are we doing here? Well, we're bouncing off exact areas we would expect, right? Look what happened last time we were here. IHS boomed up. So I'm not entirely sure, but collectively, the QQQ is not doing bad. And on the weekly chart, to wrap it up, what are we doing? Well, we were going down, we stopped going down, and now we're going up. So who can say they're in control? Well, both sides can. Why? Well, the bulls closed it out 0.7% higher. We penetrated 370, but we didn't hold it. So the bears can say, look, we broke above it, but we stomped it back below. We got a reversal candle and closing below that 50 MA. It's really important we get back above. So if the leaders are leading and we're seeing that big money, again, smart money, is what? Net long. What? Everything. The S&P, the Dow Jones, the NASDAQ, the Russell, everything. We'll look at the rest of the ETFs here in a moment, but again, these guys are long. We're seeing the leaders lead. We're seeing crypto ready to go risk on. And all things said and done, a week ago, we were at 46. We're actually more bullish from a risk reward and fear and greed perspective than we were now. Why? Well, we're higher. So we went up to roughly 54, not quite into greed territory. We ticked back down, right, from 54 to 51 to 49. But what this tells me is that same thing we noted before. Bad news is having a muted effect, and good news is moving us higher in terms of fear and greed and in terms of the chart. So if we get a resolution in Europe or we just get technical price action, I think we can actually inch into greed where people are like, oh my goodness, it's time to buy stonks. There we go. So now let's have a look at the bear case here. So the bear case is going to be that the Fed meeting minutes in the balance sheet runoff. So we cannot deny that there's been a dramatic increase in the expectations for rate liftoff, number of rate hikes this year, and then the balance sheet runoff. And I'm going to present the bear case, and then I'm going to also talk about the bull case because I think we have to look at this on a two-sided coin here. So the bear case is that we're going to get surprised when we see the meeting minutes like we did in January. The market was caught off guard, legitimately surprised that they were looking to raise rates more than expected. Balance sheet runoff is a proxy or similar to another rate hike. So if we hear about faster balance sheet runoff, that would be interpreted as more hawkish. So what that means is that if we have a negative reaction on Wednesday, it means this is likely due to the reaction to this. What I would say on the flip side, though, is that what happened in January is that there were no Fed speakers who told us that we should be expecting something different. They were talking behind closed doors and probably hoping, to be honest, that they weren't going to have to actually say they were losing control of the inflation narrative. And now what we heard this last week and the last month since the meeting minutes came out is that everyone's been saying we're ready for liftoff faster, 50 basis point hike. We now have basically a 100% chance of a 50 basis point hike in May. And everyone's been saying we have to run off the balance sheet twice as fast as before. We're likely going to start sooner. So the question here is that going to be a surprise? I don't really think so. We've already heard about it. It's been communicated and priced in. Kind of the same thing that happened when Jerome lifted off. Yeah, the same thing happened when Jerome lifted off. 25 basis points. It gives us the path forward. And where the balance sheet runoff actually hurt us bad was when we got to this period here. So it was actually in 2018. And the reason why was because the Fed was reducing the balance sheet at the same time they were continuing to raise rates. So when the balance sheet becomes an issue, it's not when they start. It's when they're starting to do too many things at once, right? Chewing and walking gum at the same time. So raising rates at the same time they are doing more balance sheet runoff is what actually hurt us. It wasn't the start of the cycle. It was actually right near the end. So the way to understand this is like When the Fed got to the end, normally what they did last time was they did raising rates, and when the rates were where they wanted them, then they begin balance sheet runoff, which means that into the end of 2018, they said, we're just going to do just one more hike. The market can hold it, and we're going to do balance sheet runoff at the same time. So now we're starting balance sheet runoff as we're starting the rate cycle, not as we're ending it. So that means that, in my opinion, it's likely going to have a bigger effect at the end of this year or at next year. It could happen sooner. The market is a future discount mechanism, which means it could discount the future in terms of where the rates are going to be, and it could pull forward this decline sooner into this rate cycle. It's not my base case, but that is the bear narrative. And again, we also have these bear targets here. So we know that if we're going to continue to go lower, we pretty much have to get back down to, right, 432. That would get us back inside of correction territory. And the way to explain this would be that if we look here at the quarterly chart for the S&P, looking at the quarterly chart, it means that we're going to be getting 2 negative quarters here. So again, when we look back in time, if we get 2 negative quarters in a row, like going back here to like 2000 and 2008, we need to have more than one, right? If it's one, it's usually done, right? There's some exceptions here, like in 2011 and in 2015, but generally speaking, if we're really going into a recession and not just a dip, what we need to see is going to be multiple quarters of contraction, which means, again, 1, 2, 3, 4, 5, 6 in 2008. And going back to 2000, we got 1, 2, 3, 4, dead cat bounce, 1, 2 dead cat bounces, then 2. So I need to see 2 quarters of negative contraction. I would also note that if we can't hold this 454 area, the strong support is found in the high 420s, roughly 428. So if we can't hold on here, we're probably going to fall back down and then losing this quarterly low at 410 and falling below 400 is where we start to confirm we're going into recession. So again, recession and a stock market collapse, not just a dip. And that is the basically what we're looking at here, where again, 150 months of expansion, right? 600% gains. Same thing we're looking at now. And we're due for a dip. Keyword there being due. It is not a guarantee. All right. What we're going to look at now is going to be the S&P 500. And we're going to look at a few charts here just to try to understand what's going on. So again, looking here at the monthly chart, let's just make sure we got the right one here. There's the month. Well, what did we do? Again, as we noted before, again, we have a perfect back test here. I'm looking at 448.92, which goes back to our December low, and we bounced right off of it. So far we got a doji to start the month off. We got 4 months of dip buying. We stopped going down. We got 3 candles now, right? What do we have? Low, higher low, higher low, high, higher high, inside bar. So that's why we need this bar to break bullish to confirm the move, because with 2 candles, it's nice. With 3 candles, it's a pattern. So as of right now, we got a higher high and a higher low with an inside bar. So to confirm this move, we actually have to get back above not only 458, but we have to get above 462, right? 462.07. So we got to print 462.08 to form a higher high and a higher low. And why does that matter? Well, let's go back to here. So if we're going to complete this pattern here, again, and then, actually, we got a perfect back test there and bounced off of it. Look at that. Maybe I should be buying some ether. Anyways, looking here, what we'd be looking for would be for us to basically get all the way back to this top area here, this top resistance. For us, that's 462. Oh my goodness. And not only did ETH already do it, it did it once, formed a higher low, perfect bounce off here. Where it's going to go into Sunday and Monday, I don't know, but it's doing exactly what I would expect if it is bullish. I'd also note this. I think I forgot to mention this before. So look at the volume down here, right? Woof, right? It's all green and all big. So big green bars, big green bar, big green bar. There's nothing here for red volume. What I want to see here happen on SPX is that I want to see that same thing feed through, where we got a couple of nice green bars here, but it's not enough to say it's a pattern. We need continuation into Monday to confirm it. All right. And then looking forward to the rest of the charts here. So that is we looked at the quarter and we looked at the monthly. Now let's look at the weekly chart here. So what do we have? Well, again, the bulls and bears can both say they got victory over the chart here. The bulls are going to say that, look, we got 3 weeks of back-to-back gains. We're over the 50 MA. We're over the anchored VWAP to the all-time high. We are poking above 454. We're bullish. The bears are going to say that, what, really? 23 cents? That's all you can muster on a closing basis. We got you below 454. Your head and shoulders neckline looks like it is a reject. And technically, you're going to stop going up next week if you can't hold 454. So both sides can say they're right. Looking here at the daily chart, this looks perfectly bullish to me. It looks like a perfect back test to my pink line or my pivot. Perfect bounce and looks nice. Is it going to hold? I don't know. Moving forward to our hourly chart, here is where the shorter time frame is going to give us a clue. Again, we got a monster dump into the last hour on Thursday. And now what did we do? Well, we were going up, we started going flat, and now we're actually going down. So what we want to see is actually breaking back above, not losing that low, and starting to advance higher, notably above that 456.6 area, which goes back to what was previously support, then became resistance, and now we're back below it. So what this also tells me is that we're going to get an early clue here. If we're going to break bullish, all we have to do is be above 448.92 going into the Tuesday close, Tuesday afternoon, which is going to be 1 day before we hear those FOMC meeting minutes. So if we're bearish, what we should do is continue to go down by not breaking this downtrend. We should just start to soft line into here and then break bearish. And then that would lead us to going down to roughly 441, which is going to be what? That is going to be our, here we got 447 as our 200 DMA, and then we got 440 as our 50 DMA. I'd also note this. Off the low, we are now up by about 12.5%. Off our most recent low in March, we are up by about 11%. So we go 11% up, and from peak to trough, now we're down by about 2, 3. 11, 12 steps forward, 3 steps back. That's bullish. Now let's look and see what's going to happen here too. So I'm stealing from Mark Minervini here. He said he's looking for potentially a 3 to 5% dip, which are shallow. So if we're going to get a 3% dip from a relative high at 462, where do we go down to? Well, 3% gets us basically right to the 200 DMA. Strong long-term support. We go down by 5, boom, we're at the 50 DMA. So if we can hold both those areas, it means we're bullish. For me to know that the quarterly chart, which I've been pointing out, is going to break bear, we have to not just have a weekly close below 454, but the trend back down. We have to get a weekly close back below the 50 weekly, which is at roughly 443 for next week. So with all that said and done, what we're really going to be looking for here is going to be the stage is set. And if you're curious on watching more of a live interactive video, we're going to queue a video up here, which is going to be our live stream from Friday. And I encourage you to watch that. And again, please make sure to drop me a comment, subscribe to the channel, and tell me, do you think we're going to go up or down? And what do you predict the market's going to do this next week? Thank you for watching, and I look forward to seeing you next week.